Hey traders, thanks for checking out this video. My name is Travis from Master the Market, and this is going to be a quick video talking about day trading taxes and how stock market taxes work in general. Now obviously I am a day trader and an investor myself. I'm not a tax professional, so these are just going to be the basics that I've learned along the years as a day trader and investor myself. And I'm going to be giving you some tips to hopefully help you save some money when it comes time to paying taxes on your stock investments. Okay, so to get started, I want to quickly explain just how stock market taxes work in general. Anytime you buy and sell a stock, you're potentially going to end up owing taxes on that investment. So let's take Apple for example here, and say that early on in April of 2020, just as everything was starting to bottom out as the big sell-off happened from the COVID-19 pandemic, and let's go ahead and pretend that you invested into Apple at $60 per share with 100 shares in total. Now fast forward a few months, everything starts to bounce back up, the economy and the market is recovering. Apple is now at a value of $120 per share, which is of course a 100% gain from your $60 per share investment. At this time you decide to sell your 100 shares of Apple, locking in your $60 per share, which means that you have a total profit on that investment of $6,000. Now that $6,000 is going to be considered a capital gain, and that's where taxes in the stock market are going to come into play. So in a way, you can really think of this pretty similarly to if you were to buy a house at maybe $100,000, and then a few years later you decide to sell that house, and because of appreciation in your area, the value of that house went up over those couple of years that you lived there, and you sell your house then at $150,000. Well, in that case, that means that you made $50,000 by living in that house over the past couple of years. That, just like your investment in the stock market, is also considered a capital gain. So these two types of investments really go hand in hand. Okay, but with that being said, there are really two types of ways that you can be taxed as an investor or a trader in the market. The first of those is going to be with long-term capital gains. A long-term capital gain is going to be tax owed on investments that you own for an entire year or longer. Now I know a lot of the people that watch my videos are short-term traders, such as day traders or swing traders, so this is probably not going to apply much to you. But just bear with me here for just a moment because we are going to talk about how taxes work for short-term trading as well. Okay, but let's say that you have a long-term investment that you were in for a few years and you decide to sell over the past year. The money that you made on that long-term investment is going to be taxed at a long-term capital gains tax rate. That can be anywhere from 0 to 20%, and that's going to depend on your taxable income for the year. If your taxable income was anywhere from $0 to about $40,000, your tax rate is going to be 0%. Anywhere from about $40,000 to $445,000, you're going to owe 15% on your capital gains. And if you happen to make over $445,000, you would be taxed at a rate of 20% on your long-term capital gains. Now, unfortunately for us day traders and shorter-term traders, we generally are going to end up owing a little bit more in taxes than anybody that is doing long-term investing. And that's where short-term capital gains is going to come into play. Short-term capital gains are simply gains on investments that you own for less than a year. And of course, this is going to apply to day traders and swing traders. And this short-term capital gains tax actually has the exact same tax rates and the exact same tax brackets as your ordinary income. So that means that your tax rate as a day trader or swing trader can be anywhere from 10% all the way up to 37%. Of course, that's going to depend on how much you actually made from your investments. But again, generally speaking, this is of course a little bit higher than if you were doing any kind of long-term investing because that is going to be capped at 20%. Okay, so hopefully this should go without saying, but this should really show you the importance of keeping some money aside after you make a big gain in the stock market because once tax time does come around, you're going to of course owe money on that profit. My recommendation is to consistently put aside maybe 20 to 30% of your profits in the stock market into some kind of savings account to make sure that you are, of course, prepared when tax time does come around. All right, now with all of that being said, I want to share quickly with you one of the ways that you can actually help yourself reduce the amount of taxes that you owe, and that's going to be with write-offs. Write-offs are simply expenses that can be deducted from profits to reduce your amount of taxable earnings and the amount that you owe. These apply to day traders, swing traders, and even long-term investors, and actually these apply really to anybody that is doing any kind of self-employed business or any kind of entrepreneurial venture as well. To kind of break down exactly how these tax write-offs work, Let's go ahead and, for example, say that there is a trader that made $90,000 in the past year in short-term capital gains. That $90,000 is going to put them at the 24% tax rate, which means that they're going to owe $14,751 plus 24% of any amount over that $86,375 low. Now, let's say the same trader kept track of all their different write-offs that they could potentially use over the past year, and they have a detailed list of all the things that they spent money on to help with their investments and to help with their trading. They come up with a total of $10,000 in tax write-offs. That means that their taxable income is now just $80,000, which is going to bring them down from the 24% tax bracket all the way down to the 22% tax bracket. So they now are going to owe $4,664 plus 22% of the amount over $40,525. Okay, so not only do they now not have to worry about a portion of their income being taxed at 24%, but they essentially save themselves from having to pay any taxes at all on $10,000 of their total $90,000 in earnings. Believe it or not, there are actually countless things that you can use as a tax write-off. I have a few things here in a list to give you an idea of some of the things that you can use. For example, if you have a computer or a laptop that you're doing your trading or investing on, any desk or office supplies that you're using, maybe you signed up for some paid courses or some kind of mentorship, if you're using different paid scanners and screeners, any different platforms or tools that you use that cost you money. Maybe you're a short bias trader and you do a lot of short selling. Any interest that you pay on those short positions or any short selling borrow fees, a lot of general brokerage fees, and even if you use a tax professional or an accountant, any fees that you pay them can actually be used as a tax write-off. So these are just some of the things that you can use to help reduce the amount of money that you owe in taxes. Believe it or not, there are quite a few others. If you go on Google and do a simple search for some tax write-offs, I'm sure you're going to find a much more detailed list, but this should give you an idea of some of the ways that you can help reduce your taxes. And with that being said, that's going to be a wrap for this video. Thanks for watching. I hope you enjoyed and learned something. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and future lessons. And of course, if you're looking to learn a little bit more about day trading, swing trading, or even long-term investing, please make sure to check out the Master the Market programs, which will be the first link down below in the description. But anyway, thanks again for watching. I hope you enjoyed, and good luck with your trading.